What's up, traders, and welcome to the Friday weekly close live stream. This week, we've had two signals on the stock market, the S&P 500 futures, that I have seen as bearish, and this is the first sign, or at least the confluence of signs I've seen all year. So it's going to be really important for us to talk about it. As usual, going to do a weekly market update to get us back in the swing for the next couple of months of the year, since we're completely done with Q1. So stay tuned, pass the music, and we'll take a look at it. See you in a bit. What's up, traders? Thanks for joining me. Thanks for waiting. So we're back streaming live again this Friday on just Discord and just YouTube. As I said, my last stream, it was not the last stream forever. It was just the last stream on TradingView. And now that I'm not on TradingView, as much as I like to talk about how great they are, as they are best in class software, they are getting a little greedy. They really and truly are. I've heard a lot of complaints from friends, members of my Discord, people that follow me, that they've started to restrict a lot of their free features, and I'm really not happy with this decision. I sent an email to actually the general manager of TradingView, because I've done some promotional work for them over the years, and I was just not happy. I basically told him, look, you've really aggravated one of your strongest advocates You know, I use your platform every week on stream. Yeah, I got a small audience, but you know what? I talk about how great it is, and I'm really enthusiastic. And anyway, enough of me complaining. Let's talk about how to actually make some money. If you guys ever come up though with a alternative to TradingView, I'm a lot more amiable to it. But they do have the best software for charting, hands down. The reason I and a lot of people use TradingView is because they let me chart crypto years ago. You know, when I started on TradingView, I have ideas and videos going back all the way to 2014 almost. It was because that was the only way that you could chart crypto without doing it manually with candlesticks. And they've continued to improve their platform. I can't trade without it. So, I mean, that's still an endorsement. But, yeah, I'll have to find a different way to get my ideas out there. And so at one point during the live stream today, when I do the analysis, which is coming up just a minute or two, of the stock market itself, I'm going to record a video idea. I'll show you guys what video recording is like in TradingView. That's going to be the new format for these live streams. Is I'm going to try to create a video, a TradingView idea out there for people to benefit from. The high level, the big thing that I want to get from people to get from the live stream, because as I said in the tag, I'm teasing it, but really and truly, stock market has done something this week. It's the first thing it's done in this year, and it's the first bearish sign that I've seen all year, and it's very important for people to be aware of it, because everybody's been waiting for a pullback to buy some stocks, and the market's just kept on going higher. This is going to be really valuable. But as always, if you're just coming in, got some symbols to look at, post in the chat. I don't know how long the symbol look at will be. It's usually the last half of the live stream. Unfortunately, TradingView was where I got a lot of my good ideas from. People would call out symbols and things like that and get a lot of engagement. So we will see what we end up with this week. So let's get into the stock market. And I'm going to get prepared here to demonstrate it. I'll be happy with my indicators as I have. So let me clean all this up. This is all going to come right back. So let's go up here, and we're going to publish, record video idea, and we're going to do the screen, allow, and it gives me just a countdown. I got to go. We got to do it live. What's up, traders? So I want to give the analysis of this. See, that's the problem. Screen, allow. All right, you got to do it all in one take. So I got to get really ready, and you can't screw up. This is the problem with it, because you can't actually like edit it. All right, so bear with me here, okay? It's just so much easier to just speak extemporaneously and get into it, but the fact that you have to do a hard cut, then you have to get into it and not make a mistake. Anyway, here we go. All right, we're doing it live. All right, let's go. All right. What's up, traders? So I'm going to do a video idea of the U.S. stock market right now. This is going on during my weekly live stream, which is unfortunately not on TradingView anymore, but you can find my links down below to click on to catch it live on Fridays. We're looking at the S&P 500 E-mini futures. This is what I like to use when I am doing an analysis of the S&P 500. And this is big news this week, because the whole entire year of 2024, the market has just been going up, making new all-time highs, all since we broke the all-time high in January this year, basically. Oh, nope, excuse me. There's the all-time high back there. So in about February this year, for the last 2 months, we've just been pushing harder and harder. Now, what you should know is that in any given year, the stock market has 2 to 3, -5 to -10% pullbacks. Sorry, that's some construction that's going on outside. Very inconvenient. And so in that time... What's up, traders? So I'm going to do... Yes, I do need the TradingView guy in here. All right. Yeah, they're putting in a new unit on the other down below me. Can you guys hear that, Jen? Can you hear that? How bad was that came through? Oh, you didn't hear anything? Okay, you didn't? All right, good. Okay, so I guess it didn't pick it up very well. All right, let's do it again. Thanks for bearing with me. Okay, cool. All right, so let's do this again for real this time. Actually, I'm going to bring back my old thing. There we go. Okay, record video idea. What's up, traders? I wanted to do a video idea of what the United States stock market, the S&P 500, is doing this week. I think it's very important. There's been 2 bearish signals that I've seen from the charts, and this is the first confluence of bearish signals that I've seen all year in 2024. I'm recording this live during my live stream, which I do every week at 4 p.m. If you want to join us live, that is at the links down below. And let's get into it. So I'm using the S&P 500 index futures, the ES, as my analysis. That's what I like to use to understand what the stock market is doing. It's, I think, the best indicator for the 24-hour nature of it. So we broke the all-time high of the United States stock market back in February. And all this year, and really since the start of the year, the market just kept pushing higher and higher and higher. And every week, just about every week on Discord or on some kind of social media, people come and ask me, is this the pullback? And pretty much every single bearish little 1 or 2 days that we get, I get that question. And I've always got the same answer. We're in a bull market. We are. Despite what the news tells you, despite what the politicians tell you, the market's still bullish. That being said, this week we have 2 very important events that happen that really get my spidey senses tingling. And that began really on Monday. Monday of this week, that's this bar right here, you have what I call a false breakout. It's very simple. Let's dig down to a lower time frame, 2-hour right here. On Monday, and it was in the evening hours, basically the European session. Actually, it's better to look at it on the daily. You basically have an attempt to push higher, basically break 2, and it actually did create a new all-time high on the S&P 500 futures. You're not going to see this, by the way, on SPY or SPX because they were closed at the time. That's why I like to use futures, because it has the full 24 hours of price action inside of it. But the fact that you have this bar right here, this daily bar, came up, made a new all-time high, and then closed back inside that all-time high, that is our first sign of bearishness. So number 1, we have a false breakout. Now, if we wait, there's one more criteria that I want to look for in any very bullish trend. This is a very bullish trend. And what you'll notice is that every single time this thing pulls back and more or less, but more in the case of this, holds that red line. That red line is not magical. It's not a moving average. It is the Ichimoku Tenkan-sen. That is the 9-period median. Sorry, get those two confused. The halfway point of the last 9 bars. And it makes a very good line in the sand to determine if this thing's a bullish trend. And so anytime I'm looking to short anything, doesn't matter what it is, I'm going to be looking for a close below that level, like a full bar close. And then to take a short, I'll be looking for a pullback to it. Now, on Thursday, yesterday, we got such a very clear example of price pulling back and not able to really resume the bullish trend. This is right after the Monday false breakout where it tried to break higher, and then it got shut back down. The whole premise of a false breakout is this. If something is bullish, if people really want to keep buying this thing, they should. And if they stop buying something, that is a sign of reversal. It's just simple. Just simple. Are people still thinking this thing is bullish or not? And now we have the technicals to back it up and kind of create that very defined way of looking at things. And finally, what we had was today. I was watching it very intently today because in this little section of price action right here, let me clean this up. Actually go down to a lower time frame. We don't need the extra indicators. I'm looking for price to basically either half the people to buy it or half the people to sell it. And that halfway point, that line in the sand right there was 52.62 on the S&P 500, or now we can go over and we can take a look at the SPX or SPY if you prefer, and we can also verify that it too has held its 50% level today. So it tried to get above it today, Friday, April the 5th, and then closed back inside of it. So now I do believe we are in pullback scenario or correction, whatever you want to call it. Now, what does that mean? Where are we going to go to? Are we going to crash all the way to double-digit SPY? No. But like I said, in any given year, you have about 2 to 3 -5 to -10% pullbacks. And so if we hop over to the SPX right now and see what that means. The former all-time high of SPX is 48.18, which is going to be the same thing if we do SPY. Let's do SPY because that's what most people trade. And so on SPY, we have the all-time high, and that's right around 479. Again, SPY did the same thing, held that. And so if we do a little info line right here and see what would it take us to get all the way back to here. Not saying it will, but I actually kind of wish it would, because that's 7.5% roundabout to pull back, to come back and try to retest that past all-time high to see if it's going to be a support. And that still falls within the statistical range for a correction. So this is actually what I would like to see. And I'd also like to read the news that people are predicting that this is a crash and blah, 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 blah. And just fear and uncertainty and doubt would be great for me to hear in the news if this happens. So now that we're up on the weekly right now, there's going to be one more shoe to fall. There's multiple shoes on this feet, more than just two. Is also likewise a close below this red line on the weekly. But that is what I'm going to be looking for us to possibly get a pullback. So basically we have, just to recap, we have a false breakout on Monday of this week. And then we have a hold of the TS. And so those are going to be our levels, or our signals that I'm looking for here. And then, of course, that's going to mean that if I were to take a short next week, whether it's puts, whether it's futures, my final ultimate target would be this support right here. I mean, I'm long stocks just like everyone else. I don't want to see them all go down, but look at it this way. Market's making new all-time highs every single week, it seems. And so people have been sitting here and asking me, what stock should I buy? What stock should I buy? And I give them the same answer every week. It's really, really hard right now because the market keeps going up. Wait for one of these statistical pullbacks that we're bound to get this year. We are now on month 4. Like I said, you get 2 or 3 of them a year. It's about time. So that is what I'm looking at in the weeks to come following April the 5th. Thanks for watching. As always, check down below. Catch my live streams on Friday, and I'll see you in the next video. Boom. All right, I'm back talking live with you guys. So that is recording. What's up, traders? I wanted to do a video. So that's what you do to record videos on TradingView. Unfortunately, you can't upload them. So this is what I want to try to do to get messages out there to people, because I have been a little remiss not to record videos, and doing something like that, a little 5-minute video, is a lot easier to digest, because then this is important, because you're not going to read the news on CNBC right now that, hey, here are all the signs for an actual pullback and what it means. This is actual stuff, and this is what I want to get out to people. So yeah, direct everyone to Discord. So yes, Jen, but here's the thing, I have to dance around that, because I actually specifically asked them this question last week. Like that, basically, I said, when they first sent me this message as a heads up, they're canceling streaming, my first response was WTF. And then I, said, all right, well, I'm going to send an email to your GM, but, and the guy responded back and referred me to their social media manager, which is just, corporate punting me over. But I asked him very specifically, like, if I can't stream, can I, promote my YouTube streams? And they were like, nah, you actually can't do that. But, so I'm gonna have to be clever about it. Might have to just do those beforehand, and then you can collect your thoughts for the stream. Um, I could, but I'm gonna try that. I'm gonna try that. I'm gonna try that because that way I have to. I can just put it out there while I'm talking to people, and it maybe it'll even sound like a stream. So look at the idea. They're gonna get more out of the stream, which they will. All right. So let's see. Again, guys, if you got any symbols to look at, put them in the chat. I'll get to them. I'm hoping that people that may have wanted to see the stream. See, the thing is, TradingView sends out notifications that they're streaming to a lot of the people, to everyone that follows me on TradingView. And that is where I got a lot of my viewers from. And so I've really had to kind of think last week and this week. I've kind of noticed people streaming on Twitch, and not that many traders on Twitch. Well, I would say I don't have the boobs for that, but yeah, I'm kind of a few pounds overweight right now. But also there's Twitter, and Twitter is another thing which I think might actually lend itself a little bit better to this. We'll see. We'll see. I can make it happen. I just got to figure out how. But all right. So on to the next phase of things. Yes, that is what you need to be successful on Twitch. So we got the S&P right now. Another thing I'll add into this, NASDAQ is also doing something very similar. It has been a lot more stalled, we'll say, over the last month. Price of the NASDAQ really hasn't gone up because tech has been sort of falling. In fact, my one bearish position I have right now hedging, I would say my trading portfolio, is a short Apple position. And I'm actually liking it. I haven't checked on it at the end of the day today, but I am essentially long puts on Apple out to June, and I have sold March puts against it. And so I actually have a positive theta option position, bearish Apple, and that's been doing that pretty well. If Apple will break this level that it's at right now, that's gonna be real sayonara for the market, basically. But I've seen a lot of weakness. I think I can pretty much. I'm already out of VFC. I think I can take that off my my watch list now. Let's see, DJT. How's that doing for you, Jen? Let's go through a couple of things actually. So Tesla, of course. Oof, man. So I've got this level marked off here, 161.71. The reason I have this marked is volume profile, and this is one thing I'm going to talk about a lot this today. We're going to go through volume profile on a lot of different things because this has become my new field of study. I say new because I, for a long time, thought I didn't need to know anything else about trading. But now that I have seen just how effective it is, I want to be an evangelist for using it. In particular with Tesla, the reason I have this level marked off is because, let me take a step back. One of the things I've been really focused on the last month or two now since I've started using volume profile is how to correctly use it. And what I mean by that is I want to know, what is valid, what is an appropriate place to measure volume profile. And volume profile, by the way, to kind of give a quick overview, is a histogram. That's what this little thing right here looks like, or you call that, where it has lines and levels kind of set on the y-axis like so, and it tells you historically where the most trading happened at certain levels. In other words, right here it's pretty easy to see that price was trading here and here and here, basically here, 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 here. But more importantly, that's where a lot of volume was. And so what's interesting is you'll find places like this where you'll have a little bit of a volume profile there, basically giving you an idea where was price traded the most. And why that's useful is it can be used for very effective support and resistance findings. I've been just amazed by how effective this truly is. And the red line here in not necessarily the middle of volume profile, but you can see where it has the largest, basically the largest section of volume, because most trading happened here. You also end up with a few more smaller levels of volume profile here and here, which then, those being the most traded points in this past time history, you can go forward and you can see how right now Tesla as an instrument is trading right at this level. I got to say, unfortunately, if and when next week Tesla starts breaking down from this 161 level, I'm going to have to get rid of it because I've been saying this trying to be overly pessimistic because, when people are optimistic, that's when a stock just keeps going down. So I've tried to be pessimistic to keep this thing from going down. But honestly, it's just such a meme stock that if this thing does start going down past this last level, which it looks like it's trying to punch, it's either going to be a double bottom or it's not. Now the only thing you have to look to hold it up is the bottom. That's all the way down at freaking 100. And then it's not going to stop there. It's not going to freaking stop there because what I really, I don't want to say fearful of, but just what I know is this is a situation kind of like Facebook from a few years ago where they had that earnings report. Let's just do the daily. They had that earnings report in June or January of 2022, February 2022, and it just gapped straight down. A lot of people were like, oh, this is a buying opportunity for Facebook. It can't go any lower. And not only did it go lower, not only did it come down and retest that COVID low, but it actually went way lower than the COVID low. So something that's a meme like Tesla or a meme stock or a crypto, it is always, well, not always, but it wants to hurt people, okay? And so what it's going to do is it's going to go further than anyone thinks it will down. That's just what price does. It forces people to get out. It hurts. It makes you emotionally suffer so that you get out of it at the bottom, and then that's the bottom. And that's the way it is. And so Tesla is just, I've been saying since it broke 200 and not really responding to my own rules there. But that's because I bought it because I bought a Tesla and I really like the stock. And that is not a good investment thesis. I'll tell you that right now. That's going to be an expensive lesson for me that I need to stick with reading my charts and not, I like the thing I bought from them, so let me go and buy something of equal value. That is not a good investment thesis, ladies and gentlemen. So don't do that. Don't do that. Meta is a dividend stock right now. Where am I cutting my DJT? Never. Never. I will never cut my G. Actually, I was looking at DJT, and I really kind of do want to fund money a little bit, but it's not really investment grade. I'm not going to do that. It's not that great. One thing I would just to kind of double down on the volume profile, and I want to look at it some more. I'm going to do my levels for volume profile for Bitcoin and the stock market going into next week because I'm going to do my homework with you guys because I want to know where to trade it. So we're going to get Bitcoin here in a second. But one thing I was looking at on GIS because one of my friends was talking about how they're kind of under fire because I don't know they're doing stock buybacks on General Mills and people are like cereal is like really expensive, they're greedy. I was like, okay, well maybe, but we're just here to trade. We're not here to talk about politics. And one of the things that we can look at here, and I thought was very, very interesting, is to go back and look at all this past price history of General Mills. And so as I was doing that analysis while my friends were riffing about politics, I go back and I take a look at this whole price action. That's incorrect. We don't really want to look at the entirety of going back 20 years. We really want to establish ourselves, at least if we're looking at, and this is going to be historical, by the way, but we can look at this. We want to look at from a major high to a major low, and then that's going to be our volume profile for the trend that got us here, such that whenever we start getting a pullback down, like so, we can get an idea of where this thing's going to stop. You can already see that I have my spike indicator here that basically in October of 2023, like a lot of stocks, bottomed out. But if we go and objectively look at volume profile, what I like to do is I like to take a look at this histogram and sort of figure out, okay, where are my major volume profile levels? Obviously, the point of control, the red line, that's the most. But then we can also say, okay, here's one, and then how significant do we want to go to? So I may want to go to this one, and then you just validate, yeah, that is a really important point for this pullback. And so then I'm going to mark off anything that's like the peak of these levels. So of course it's going to be the point of control, and then it's going to be, let's make this level here, and then let's make this level, and then this level right here. Now that we got those drawn up, let's go see how that pullback actually fared with those levels. And you can see that out of those that I drew up, the first one where the volume profile really picked up was right around this level right here. Man, this is why I'm so into volume profile, because not only did I get a second technical signal at this level, which is very, very important to me. I'm not just, well, I'm trying to get myself to the point where I'll just throw contracts or shares or an option out on that volume profile level, because it's actually that good. And we can even see here where price held that level multiple times before doing its leg up. But I still want to combine it to be safe with an extra technical signal. And that was that spike that came back in October. But you can just see what price does around these levels. And I'm trying to, I know I'm looking back in history and I'm saying, oh, look at this great indicator. But I'm not selling it to you guys except to say that you guys need to use it. This is free. It's on every platform. It's just great. Okay. And I've been doing this more than a decade, and I know not to, drink the Kool-Aid too much on this kind of any indicator for that matter. But I like simplicity, and it was very hard for me to add this to my trading. Trust me, I did not want to start looking at this. I did not want to clutter up my charts, but I can't deny it. Cannot deny it that it is very effective. There's been a lot of instances back here on Bitcoin. There's a lot of lines here, but I'll explain here. So this is my homework done for Bitcoin basically, but I'm going to redo this for the weeks coming up. And one of the things that I do is I go for each week and do the volume profile levels that are very significant. And you see that I've got this level that was drawn up back here. This was where price got to this week, Tuesday. Yeah. We had this big sell-off to start the week, and then it stalled out here at the confluence of two major levels. And that's this 3-4 week bulge, which that's basically one of those bulge, not the point of control, but one of the volume profile levels. But also this orange line right here. What that represents is, and this is getting kind of messy, so that's why I come over to my clean chart, my no volume profile chart. So the levels that basically Bitcoin is fighting right now are levels in its past. You know how people will talk about you can't live in the past, you have to live in the present. Well, if you are making new all-time highs and there is no price history to go on, then yes, you are free to live in the present and literally YOLO. If not, see, we have the past all-time high of April of 2021, and then the next past all-time high of November 2021. And right now, that is exactly what Bitcoin is caught between this week. And when I talk to Bitcoin maximalists, the people that just think that Bitcoin is the best thing ever, it's going to replace fiat just because Bitcoin is morally better in some way. Cool story, bro. And they'll tell me, oh, well, that doesn't matter. There's limited supply, and Michael Saylor is buying a bunch more of it. Now there's an ETF, and BlackRock is buying it. So technical analysis is useless. It's just astrology for men. Well, okay, then why has it stopped? Why are you not as rich as you want to be yet? You've been sitting here for, 3-4 weeks now, almost a month? I mean, Bitcoin should be 200K, right? That's what you told me. It's caught. Now, I'm not saying it's going to stay here forever. In fact, it's not. It's absolutely not going to stay forever. But I've been doing this for a long time, and I'll tell you something about what's going on right now. Price abhors a consolidation, kind of like power abhors a vacuum. And at some point, this thing is going to break. And the longer it stays, the more pressure it builds up, the bigger the move is going to be. And it could be the YOLO move. It could be straight up to 100K. Or not. So I'm kind of neutral right now. I'm very neutral. But it's very clear. If you go and you just look at the price action this week, all the way from it holding that as a support, the past all-time high last week, held that past all-time high as support, broke it this week, went down to the April one, and then this week on yesterday, held it from the top side again. price levels matter. They do. All right, let me check the chat. Hey, what's up, Stone Pilot? Good to see you over here. Hershey's, yeah. Well, Stone Pilot, I think that what I'm going to start doing is more. I'm going to acquiesce to TradingView, and I'm going to start doing more videos, some more, I guess, teaching type of videos with volume profile, because I think it's very valuable. Because yes, live streams are probably not the best way for teaching, because people want. I know I'm that way. I should know better. I should know I'm not going to sit through a 2-hour live stream and learn about something. The reason I really love doing live streams is the interaction that I get with people. People calling out symbols so that we can look at them, like yours. Let's take a look at HSY. But if I want to get what I think is useful information out there for people, then I got to do videos. So, all right, Hershey's. Looks a little volatile. Let's see, going all the way back. Let's first do our price levels. And so the start of this trend, okay, lacking anything better, we're going to start March of 2020. And yeah, that's basically, Hershey's right now on a pure price level is bouncing around the 50% level of the whole trend from 2020. That 2020 COVID low is still affecting markets to this day. And it probably will for this whole decade. It will. It just will. Less and less as we get into the latter part of this decade. But the COVID lows, you're going to be able to find relevance in pretty much every stock up at that point. All right, now let's do a volume profile analysis. So let me not distract myself. Let's take a look here. The 50% is in a non-volume profile level. So so it's not going to help us here at Confluence. But we got the point of control down here. We got another major level right here. And then above us, we've got a level right here. Is that going to be all of ours? Let's see. Yeah, that's pretty much going to be it. Pretty much going to be it. Those are going to be our significant ones. Those are the ones that I would consider. All right. And as we see, holy crap, Stone Pilot. Look at that. Can you see that? So this is why, okay, great example, Stone Pilot. Great example. Holy crap. This gets me excited. It really, really does. It really, really gets me excited. And the reason for that is because of things like this. All my trading career, well, not all my trading career, but the last, I'd say 5 years of my trading career, I've been using 50% levels and spikes. And that has been successful for me. Now that I incorporate volume profile into my analysis, I realize that in a lot of ways, I've just kind of accidented myself to success. At least that's what I'm humbly, thinking has happened to me. Slashing a little bit there. But when I go back now and start looking at volume profile, I begin to see that behind the scenes, me not knowing about it, that was what was, it was like a great wind had lifted me up this whole time, basically. A great hand of the market had kept me going. Nah. But what's up, Wolf? Good to see you. And so now, with the benefit of volume profile, let's get really exact about this, because I kind of just did it. Let's zoom in here. I want to get the perfect price point and just see how perfect this is. I think I've got it. I think I've got it right here. Yeah, that's about as perfect as 178.78. So let's go back and look. Missed it maybe by a little bit. I really want to know. Okay, I'll tell you what. Let's do this. Hold on. All I ask for is perfection, guys. That's all I ask for. I don't think it's too much. We should do it. I just want perfection. One thing you can do here is you can change the row size. Let's try 3,000. Hopefully it doesn't crash TradingView. And then what that's going to do is make those even more granular, because I want to get, oh yeah, there we go. Look how granular that made it. Okay. Now we're going to see like the actual, but basically those row levels are going to give you like every cent essentially, or just almost every cent. And so we can get really, really close to that very tippy top. Now we go and we see what level that is. Was that the one I did? No, wait. That's not it. It's this one. Bear with me. No, I think I got it. I think I pretty much got it. I think the level is, I think that's proper. In fact, it may be a little bit down like so. Okay, 178.77. Well, I was trying to make it perfect, but okay, it missed it by a few pennies. My bad, my bad. But really got into that range essentially. But this is the kind of thing that I started noticing as I start to incorporate volume profile, is where if you would have bought Hershey's on 193.38, you'd be break even now, but you would have caught the support. But if you want to catch it at the last level, you want to catch it at the tippy top or the bitty bottom, this is what you do with it. And this is because that's where people traded it the most back here in this June through November, December of 2021. And that's going to be that level there for you. And so the more and more I do this, the more and more I see just how effective these levels can be. Did it stop here on this one? No, that was a total fail. But as it comes to that confluence, remember when I say that confluence, that means a combination of two technical factors. That's what I want to use as an entry. That's what I want to use as a trade. And so what I've started looking for is the volume profile level matching with like a 50% level or past higher low or a spike. And so my analysis of this is it's come to a support and it's holding. I would be very happy to be long Hershey's right now. You also know when you're wrong. Same way that I would know I'm wrong if I was taking a trade otherwise. If it breaks this level, then that is not good. And so that is one thing you can know. Because then what's the next level? The next support level is going to be here at 148.60. And you don't want to hold something all the way down to 148.60. And so the real benefit in trading is not knowing exactly what's going to happen. It's not predicting the future, but it's being able to assess risk and know when you're wrong so you can get out and protect your capital. And so that's a really good one to look at. What's up, Coffee Guru? Bought GILD in October. Did I just enter the valley of despair? Oh, no. Oh, no. The valley of risk. Gilead Sciences. You bought it in October. That's a really good buy. That's a really good buy right here. And unfortunately, yes, by definition, and this is someone that's in the valley of despair, valley of risk, as I call it, with Tesla. I mean, you got it right. The problem is that it didn't go. It just didn't go up. And it came back, it held it, and now you got to close below it. So now you're entering into a realm where it's going to go all the way down to 57.33 before it finds any more support. But let's do a volume profile. There's going to be a lot of stuff we got to consider because all this kind of matters from here to here. So let's just take a look at price from let's go all the way back here. I don't want to, but we need to. That's 2016, but let's just see. Okay. So where you're going to find your next level is going to be 67.53, but it really, look at that. I mean, you know, like I was saying, you go back and you take a look at things, we can see very clearly, you know, here is the point of control. There it is. But also you had this area right here that peaked out at 73.33. And that is basically where price was held up all this time from the time you got in October. Great trade in October, but it's not holding. It did not break that high to continue up, and now you're in a bad situation. And that's another thing. Once price gets down past one of these volume profile levels, it really likes to traverse. It really wants to go find that next level. And that's what it's doing right now. It's trying to find its way down to 67.53. And then you don't really have any clear defining levels down here. So, yeah, unfortunately, this how I handle this situation, you know, hashtag this is not financial advice. You can do this as you want. But in the future, I just find it so much better to get in a trade like you did in October on, but by the way, just as a key point here, let's back up for a second. Let's go to your October trade and let me clean up charts a little bit. And I have this, I already have this, this is my retracement levels indicator, which is free. If you just do a search for retracement levels, nothing fancy about it. It just shows me where 50% levels are. And so it lets me cheat So I can see that 50% of this trend up right here. That's all it is. And then, like I said, I want to find those confluences of volume profile. Come on, draw it. What's it doing? I'm not lagging. Volume profile. Go. Okay, trading view. All right. Well, we saw it earlier. Those two matched up right there. And so that is what I want to see. So that October, I wasn't using volume profile in October, but you see how when I go back and I look at my good trades, they turn on a dime when I wanted them to. When I bought them at 50% levels, now when I go back and look at my winning trades, I see that there was a volume profile level there. So like I said, there's a big lift. Something lifted me up. A great hand lifted me up. Let's take a look here at this leg up right here. Come on, Trading View. They must have heard me talking shit about him. What about a different chart? Okay, let me restart. Chilled. There we go. All right, I just had to refresh the chart. So let's hold on. I'm trying to give you what I want to think about when it comes to when to take profit. But what I was going to say was, if you go back to that level in October and you buy it at this level right here, what I like to do in anything where it's a stock is when I get to a target, I want to close at least half of my position, and then I want to hodl the rest of it. And what that's going to do is that's going to give you a lot more flexibility when something starts to come back on you. The most recent example I have is BAX. So BAX is one that I took earlier on in the year, and this was a 30-minute spike that happened at a 50% level back in February. And once it got up to here, I took profit on this trade. And now I still have about 25% of my shares that I've been hodling through all this volatility, completely emotionally, neutral to it, because I've already taken my profit. Even if it were to have come down and stopped me out below 40, I would have been fine. But I've still got that position on up to here. And so that's what I want to do in any kind of trade, is I want to get up to that 3-to-1. Basically, if you're drawing it up as a trade and you go long right here, 3-to-1 is going to be somewhere in this range. 3 right here. But oftentimes you might not get up to that level. And so let's dig down into, but that's the way I can emotionally avoid situations like this. What do I do? Well, you've already taken profit. Who cares? Get out. Is dig down a little bit, and then let us go here, take off some of my spike indicators and retracements because we don't need them. And then let's do a volume profile analysis of this range right here. All this price action that happened here. So from the moment that the buyers took control, that's the defining line, to the moment the sellers took control. Let's take a look right here. So the volume profile point of control is here. And then I would say the next highest is there. And we don't really care about this one. Maybe if we're being aggressive, no, I'm not going to be that aggressive. Maybe if we're being aggressive, we'll take a look at that one. Let me zoom in, see if you can see it on stream. So that's the kind of volume profile I want to kind of do. There's my main bulge, the point of control, the highest point on this one, and then it's kind of like a secondary one, this one right here. I don't want to use this one all the way up here because it's just so much less significant than the rest of the volume profiles. In fact, this one down here is much more was traded down around 79.31 than it was actually at 88.01. So that's what I'm going to be comfortable with as my position, or as my targets, to kind of play that high conservatively. Let's just throw it on there to see. So that one right there. Okay. So now let's go to the daily, and let's see how those levels match up for what it did. Well, it's interesting. Let me take that off. To then look at this. So just barely, look at that. It almost came up to that level, just almost perfect at that level up there. But the more conservative levels were these right here at 86.41 and 85.62. And again, things that happen like this in price action as I've started studying volume profile are what get me so excited, because look at what price basically did here. It basically, in between those two levels, kind of created a little bit of a bouncing motion. It definitely knows that those levels are, or this one right here that I drew, where it comes up, stops, hangs out, gets above it, holds it again. Price actually really likes to move between these volume profile levels better than any other level that I could have drawn off of highs and lows. And that's why they're so powerful. But also, in that case, if we're going to go back in time and redo a trade, get a little do back like we don't really get in real life, is now that we have our levels marked off here, if that was going to be our trade off that level, what we could do is we can say our long position off of here was there back in October. We want to set our profit target at that level that I said was probably the best one, not the one all the way up there, and then give ourselves a 3-to-1 risk-reward ratio. And then that's how we're going to make that trade. Because shooting for that tippy top is just sometimes a little too aggressive, and the market's going to go, no, you don't. No, you don't get that. And so I always in my trading career have wanted to kind of play a little off base of that major high or low. And what I've done in the past is either had to choose like one of these, highs, a little bit more conservative, or used what I used to call a Tinkinson turn, which is basically where this red line does a little turn. So right there, which is about the same as that lower one, but now I'm going to start using volume profiles of the past high rather than the high itself. So I hope that helps right there. I know a lag-free chart would have cost another $29.99. Yeah, probably. So how does, Coco. Yeah, that was something I posted in Discord the other day. So Coco looks like a damn shit coin. You're welcome, coffee. Speaking of coffee, well, this isn't coffee. This is Cocoa. This is chocolate. But look at this. This is a weekly chart of cocoa. Like Hershey's. Chocolate. Like, is this why you're asking, Stone Pilot? Hershey's is a rather interesting thing to kind of consider. Like let me do a monthly chart. Let me do a 3-month chart. This is a 3-month, a quarterly chart of cocoa. All right. So since before I was born, 1980, until October of last year, so for 40 years, 43 years, cocoa has traded in a range, pretty well-established range from here. And now it looks like this. So I hope you enjoyed your Easter chocolate, because your Halloween candy is going to be much more expensive. Thank you for that. Jen. Does anyone ever actually pop into the live stream chat? Oh, yeah, he does. Hey, Wall, what's up? Yeah, can I check Disney? What do you think about the weekly breakout? Maybe we should just start doing it in there. But thanks for checking. All right, so let's look at Disney. So Disney, but yeah, Coco. Wow. All right. So I've already got it circled right here, but I had a good friend of mine that I had a talk with him. He was like, hey, I'm trying to learn about stocks, that kind of stuff. I got a bunch of positions that are just not doing well. And I said, well, man, you need to keep your winners, and you need to, get rid of your losers. And so he said, okay. And so he comes back to me a couple weeks later and said, this is in, I think, beginning part of the year. This is like, it was about the end of the year, beginning of this year, about right here, January. He said, okay, well, I sold Disney. I was like, no. Like, Disney has been the clearest example of coming to the COVID low and holding it. Oh, it's just so beautiful. Like, it came to a major low. And no, like you wrote it all the way down to that. It gives you, 2 months. That's a monthly chart. It just a beautiful freaking hold of a major level. Again, a lot of people, they say technical analysis is astrology for men, but I mean, you have this major low that everyone can see, back in 2020, this COVID low, It's 79.07, and then we fast forward, and it just comes down, and it just holds it. It's beautiful. And of course, you have a couple earnings that just gap up, and away Disney goes. I mean, don't bet against the mouse, they used to say, right? I never really bought into that. But yeah, what was his specifically? You were hoping to get an ad to your Disney soon? Well, I mean, it's Disney. I mean, I know it's kind of a tautology, but what do you think about the weekly breakout? Okay, well, let me get more to your question here. I'm just kind of riffing about I'm a little frustrated because he didn't need to sell it, but that's why you don't give people financial advice, because you never know how they're going to take it. It was a loser, but if you're going to hold on to a loser all the way to the bottom, I mean, anyway, he finally comes back and actually told me about Disney when this happened, when it gapped up, and he's like, "Oh, I got out of it." I was like, "No, why did you do that?" It's because you told me to. No, I didn't. I said to get. Well, okay, I guess I did tell you to get rid of your losers. God damn. Okay, I gotta be careful what I tell people. But if something comes down to a major low and you've ridden it all that way, and then especially when it starts to hold it, if it comes back up, that's not like bag holding is a bad strategy. So the problem with one of the pitfalls of bag holding is, I'm going to get to your question here in a while too. I am going to do a volume profile. I'm riffing though because you triggered me. One of the things that you have to the problem with back holding is when something comes back up for people, they always get in this mindset like, well, I just want break even. I just want break even. That is a horrible idea, because if you only waited for break even on all your trades that were losers and you just rode them all the way down to zero, and then the only profit you ever took was at break even, you're not going to have a very successful strategy now, are you? So you're either going to cut your losses when they're at a loss and they hurt. You're going to either learn to do that, you're going to sack up, be a big boy or a big girl, whatever, and learn to take your losses, or you're going to have to sit there and let them come back to break even and then actually make you money. You got to do that. You can't have where your winners are break even and your losers are just catastrophic. That's not a recipe for a good strategy. Anyway, to the question, weekly breakout. Let's put on Ichimoku. It's good. It's freaking good. It's good. Disney's bullish, very bullish, very breaking out, by breakout I mean on Ichimoku, you have price above the cloud, and since I believe probably the second week of March, you would have been good on the second week of March. Let's take a look. Yeah, at that moment, what I like to, actually, you're straight into that. So basically, when the second week of March closed, the 11th of March closed, you have price already out of the cloud, and you have momentum, the Chikou, coming out of the cloud as well. At that point, you're good to go long. And so this is a weekly Ichimoku cloud breakout. Let's take a look at the volume profile to see where our levels of resistance are. Yeah, let's do it. So we're going to start from the top up here down to the bottom, and a lot of the trading happened in here. But let's just for curiosity, let's just mark them all and see how price behaves. So we got a big one here. We got a big one here, and then really not much all the way up until we kind of get a little bit here. But that's kind of very, that's a zone more than a peak. Peaks are really, 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 really important. That's where you can really get those solid, perfect reversals. So, yeah, okay, I'm content with these levels right here. All right, let's take a look. So, if you notice, this is cool. So, when price got out of the cloud, what did it do? It closed this week of February above the cloud, but also above that level. This is why these things have excited me, guys, because you get oftentimes let's go to the daily. You start to see little situations like this where price gets above it, it then holds that volume profile level for support, and then that becomes the launch point. Mwah. Just, it's just amazing how effective that can be. And so let's go here. And really, the next resistance for this breakout, yeah, it's going to be in this 150 range. So yeah, you're good to go. Just, I mean, it's going to do what it wants to do up and down. But this is a weekly chart, so you got to take a weekly time frame on it, and a weekly time frame means years. So at least a year, you need to sit here and just go through any pullbacks we have in the stock market and just kind of hodl it, because really where you stop out on a weekly trade is if it got that back out down to into the under the 90s, like right here. That's your stop out point there. So you got to give it the play here, but your first level is going to be 150. And like I said, this is weak. This is weak. Really, your target on this breakout needs to be 176. Yeah. I am long Disney, by the way. I am. And it's actually one of the ways I'm long. I'm not long. I am, but also in my nephews and nieces accounts, because it's Disney. It made sense for me to get it for them. So this was last year's Christmas and birthday presents. I think I bought each of them a share of Disney, and that's what I told them. And they're small. They're like 5 or less years old. So, of course, I got the 5-year-old some Lego, of course. But when they turn 18, they'll be glad to have some Disney. So, yeah, good to get that for them. Oh, let me redo that. So, yeah, let me get rid of all my lines right here. Essentially, oh, no, I want that line. So let me clean this up. So my analysis of Disney is at a very short term. I mean, we probably do want to just be diligent and kind of assess when it comes to the 50% at 141, but that doesn't really match up with anything there. And I'm really curious what happens at 141 if, because there's no volume profile level there, if it's just going to blow past it. Whereas in past times, I would have said, okay, well, that's your target. No, you don't really have anything that really is any sort of a volume profile level until 150. But really, like your take profit, or at least take some profit on this, would be 176. So all the way from 118 to 176. Yeah, that's what I would say on that. All right, guys, we're getting up to the end. If there's any more signals posted in the chat, let me do a quick level then, a level volume profile of Bitcoin to round us out. If you got anything to look at, post them in the chat right now. But I'm about to close it and wish you guys a happy Friday. And I gotta publish this video right here, because it's kind of annoying. But if you don't, sometimes I've tried to publish this after recording a video, and it will error out of me, and then I'll just lose it. So that's not fun. Thanks, TradingView. Anyway, yeah, it may be. I'm gonna find out when I publish this after if it's going to just say like, nope, you waited too long to hit the publish button. Error. Ugh, I hope not, because I don't want to sit here and like do all the tipty typings with you guys. That'd be a waste of y'all's time. All right, so real quick, let's start with the Ichimoku of Bitcoin. So it is still bullish in that on the daily time frame, one of the best indicators of Bitcoin over its entire history, over the entire time I've traded it, because I started trading it with Bitcoin years and years ago, 2011. Yeah, was the cloud breakout, like we looked at the weekly on Disney just a moment ago. And when price gets out of the cloud and momentum gets out of the cloud, bullish Bitcoin on the daily time frame, Ichimoku. Likewise, if it had gotten price out and momentum out back after the ETF launch, then that would have been bearish, but it did not. It came close, but it did not fit our rules. Likewise, if we go back all the way to 2021, when price got below the cloud, momentum, back in December, you had that jobs report, which, why does that matter? Because Bitcoin, no one wanted to admit it at the time, but it was going to be affected by interest rates. That was the signal to get out to avoid all this mess. Did it again in May of 2022, right before it finally did that dip. And of course, once again, didn't quite get bullish in August 2022. Then you had FTX, and then January, well, there you go. So Ichimoku breakout's very important. And so we don't have anything close to a bearish breakout, but the longer price consolidates, the closer it gets to the cloud. But still, one thing it could do is exactly what it did right before the ETF. It could bounce right off the top of that cloud. And so we may end up getting right here and bouncing off next week. That's going to be interesting to see. So that's Ichimoku right now on... See, I should also be doing a second video on this for my... Anyway, whatever. Trading view. I'll do it later. I'll do it this weekend. Before next week. Jen, don't let me be lazy. Let's see. Okay, so for next week, I want to go down and I want to figure out what are our significant levels for this. Okay, so we're going to do the most recent that we're in, where the sellers kind of took control up to here. So going into, we don't need to be that granular. I'm going to go back to 1,000. There we go. Okay, so that level, I don't want to be too granular about. So that's going to be the level there and none there. And then one thing I do like to do is the periodic volume profile, which is a separate indicator on TradingView. And then we're going to set this to not a month, but a week. And so what that's going to do is give us our, no, don't do that. There we go. Hold on. Okay, so our volume profile levels on the weekly, there's our point of control from last week, or last week, along with a point right here. These yellow lines I've got, by the way, are those past all-time high levels, which it's clearly defining price. Volume profile level, point of control down at 63,155. Okay, and then another major one down here from the big run up in February. That's going to be at 62,055, and then we don't really have anything until we get down into the 5,000. So those are going to be our weekly volume profile levels. And so when I'm day trading Bitcoin, notice something very important. Again, go back to the volume profile. This right here is the volume profile from last week, and the point of control of last week was around 69,893. Let's make that perfect. Which was essentially, we're going to make that perfect to that red line right there. Come on, get up there. It's going by. Okay, there we go. Which was a perfect hit. Let's take that off. Here. This is last week's point of control coming up, and then here was Monday, 5:30 p.m. Eastern. Bing. I wasn't trading on Monday at 5:30 Eastern. I tried doing my trading during the day, but that's just an example of how it works very well in Bitcoin. So if you're sitting there looking at this, maybe you're down on a 5-minute, and you see, was that a spike? Was that a spike? No, not quite a spike there, but that's just an example when something holds it. One thing you could probably do is actually incorporate Ichimoku breakout in that analysis. Like, in other words, price came to a volume profile level, then you had your cloud breakout. Take it. That's just the way you can incorporate. In other words, you can use a lot of different setups just knowing these levels. So let's go back to the 30-minute and get rid of Ichimoku to make our charts clean again. And so into next week, these are going to be my levels going in. So it's going to be, I'm content with this. So it's going to be 69,898 or 894. I'm not going to list them all, but that's what I'm going to do going into next week. And so basically, I'm going to sit here and every morning when I'm looking at ES futures, NASDAQ futures, looking for stock opportunities, I'm going to be watching these levels. And when and if price gets to these levels, I'm going to be looking to take a trade. By the way, just full disclosure, I am still short Bitcoin using BITI. And it's just kind of hanging out. So if we break that low on BITI, which by the way is the ProShares Short Bitcoin Strategy ETF, it's basically, and it's been going on for a long time. This is not By the way, Bitcoin ETFs have been around a long time, just not ones that actually buy the Bitcoin. These are based on futures. But yeah, it's right now it's kind of holding, just doing its consolidation. Who's gonna win? It's really interesting, getting really interesting. All right, last couple. Let's do these for Wald. CSX. So transportation. Ooh, this is a good one. So this is one that I've already got marked up, but let's clean it up a little bit. So this is an example of a false breakout. So you have back in February, this is a weekly chart, comes up, tries to make a new high. I don't think I can use an example of a false breakout better than this one, because that is a very big bar, and it not only has a major clearance of the past all-time high, but you have a good solid close inside that past all-time high. Not only that, but you also have 2-3 weeks. You got a spike on the daily. Man, that's a spike on the daily right there too. A spike alert, basically. By the way, if you guys want this this indicator, just send me a message on Discord. It's free on TradingView. I just want you guys to come hang out on Discord where I talk about it and answer questions about it, as well as share ideas. It doesn't cost you anything to get on Discord with me. I was looking at today. Some guys got a $250 a month Discord. Jen would love for me to set that up. All right. So, but no, this is a great example. I mean, not only that, you have 2 weeks that it basically held that all-time high level. Levels matter. So this is bearish. I mean, this is very bearish. So you either need to be short or you're in dangerous territory. Let's see where it can stop. So going all the way back here to when it broke that level up to here, the point of control is naturally back down here. So if one were in, so if I was going to draw up a short trade on that daily spike, see, we've got this one here. That's the next level. Content with those two. Let's see, get a little more exact. There we go. All right. So if I were to go to the daily and look at this as like, okay, I'm playing this short, then what I would do in this situation is I would have put on a short position on that Tinkinson pullback, stop right above the high, and then take it down to here. And there we have a 3.5 risk-reward ratio. That would have been my trade to take this thing short. So notice how also we have our 2-to-1 if we preferred a little bit closer to our level, that second one, to be a little bit more exact. More relevant, the recent price action, the recent volume profile. We have well, of course, it's going to be right here. It's going to be the next level is at 34.72. So, and that's going to be pretty much the only significant one on the way down. So this right here is definitely going down to, well, I shouldn't say definitely, trading, whatever, hashtag disclaimer, 34.72. Very clear, very clearly 32, and that's where it wants to go. All right, let's see here. You're long CSX from October. I think you missed your chance to get out. What's that download button? That downloads the video, and that's how I can upload it to YouTube. INFY. All right, so let's see. For Wald here, so pure price action, yeah, the earnings dip right here, very significant down to here. Looks like it wants to get to 14.57 on a pure price action standpoint. We're just going to use this recent stuff for the volume profile because it's more relevant. And let's see what matches up here. So volume profile, here's a little quirky trick of volume profile I've noticed, guys. It's interesting to me in these kind of, oftentimes what you'll see is the point of control will be way down at the beginning of the trend. I find that interesting. I'm not sure exactly why. I mean, mathematically, it means that there's just a lot of volume that traded down there, which makes sense. A lot of people bought it. But Bitcoin has a really glaring example of this, which is kind of interesting. So there's a volume profile level there at 1337, elite 1337. These get a little nebulous, but let's cite that as the bottom there. So If I were to want to long this 50%, I would let it come down a little bit more to here, see if I can pick up that bottom, and then try to play it back up. And then, of course, that means my target would be this next volume profile over here. Boom. So if I was going to do a trade ahead of time on this, I would either try to take it off the 1457, or if I was trying to play a little off base, maybe cheat a little bit, get it down there. And then my target is going to be 1661, give myself a 3-to-1. There. That would be my trade. And you know, another good thing about volume profile is for the longest time, whenever I was trying to set up trades and I was looking for stops, I would be very nervous to put a stop loss here because I have these lows here. Because those lows were like the thing I could see. And they would be like, oh, well, you know, I don't want to have my stop at a low because it could come down to that low. And then I feel like an idiot if it stopped out. But now you can see that even though these lows exist, they're not nearly as significant. They're just not really that important as, say, this action right here. And so price can kind of meander maybe in this area, but it's not really going to respect these lows nearly as much as it's going to respect this 1337. And so this is a whole area that you can just avoid with your stop there. And so that's just there's just all kinds of cool and useful stuff that you can gather from volume profile. So I highly encourage you guys to start playing it. All right, let's wrap things up. That seems like all the things for today. Thank you guys for joining me and spending your Friday afternoon. I'll be back again next week. Make sure that you follow and do all that kind of social media stuff, and we will see you next week. Bye-bye.